Hey, dude, that's
because
fine.
I I
Speak your
see
truth, man. Speak
I
your
see
truth.
stocks, I see individual stocks, even if you think that you're getting diversification, say if you buy a stock in Amazon and a stock in some
Tesla.
gas company, some other, but because they're both publicly traded companies, you're still going to have too much correlation when there's a downturn. We saw this in 2000, we saw this in 2008,
Eight.
2009.
Mm-hmm.
We saw this past in
Year.
2020, right?
Mm-hmm.
So my my investment strategy, if you're looking to get capital appreciation, which again, taxes can get you caught there with capital gains taxes. But my strategy is actually to seek out markets that are the least correlated as possible, and then put a proportionate amount of money based on how volatile those markets are.
Well,
So something like pork bellies, that's gas. Gas is actually just crude oil. You get some futures for crude oil. You can have that as a portion of your portfolio instead of buying into ExxonMobil or something, right? Where you'd be exposed to the company and not just the underlying asset, right?
mm-hmm.
And
Well, for so you like to diversify.
I think there's a minimum amount of diversification you need, because you can still get the same returns as if you just, well, not if you put your eggs all in one basket and got lucky, but you can still get a very similar return if you diversify a small amount versus if you just if you put your money in a couple stocks.
That's what Ray Dalio, who is a famous hedge fund billionaire,
Hmm.
um, he his I think his investment philosophy is basically to diversify. So he got
Hmm.
stocks in China, Africa,
Hmm.
gold, silver, commodities, some stuff like that. But for me, at least, my investment strategy is growth. So
Hmm.
I'm holding for long terms. I
Hmm.
used to invest in like dividend stocks investing, like different
Sure.
dividend stocks. So basically companies that are paying for owning the shares of their company. I'm
Hmm.
explaining this as we speak, because I feel like this could be a different language for other people who are listening.
Sure.
So for me, I kind of re-strategize my investment philosophy to growth. So
Hmm.
I'm more researching different types of companies that I like that's producing products that are that's giving value to different companies, whether it's a B2B or B2C company.
Right, right.
I'm more in the future technology side of the stocks nowadays. So like AI, artificial intelligence, augmented reality, EV, um, blockchain technology. So
Sure.
there's a lot of things that you can invest
Well,
in.
that's definitely, I don't think that's a bad strategy by any means, because if you are spending enough time in one specific company and you're actually researching, what their management philosophy is, what their sales practices are, how they're going to get their product from the business to the consumer, business to the other business, whatever their product line is
Mm-hmm.
or their service line is, you can see. And that's what angel investors do. When you're an expert in your field, you can make money off of that, right? That's really just the name of the game. Is once you're an expert there, that's how you can make a lot more money. That being said, I think the diversification and buying into the trend of the price,
Mm-hmm.
that is good for anyone who might be, a state worker or a teacher, right? Someone who
Who
might
does
not be
who's not into stock, who's not into investment?
right.
Yes, yeah. So I always like kind of when people ask me like, oh, should I invest in the stocks or this individual stocks to
Mm-hmm.
invest in Tesla? I was like, well, I don't know your situation. It's not
Right.
my hard earned money. I don't want to be liable
Mm-hmm.
to um saying yes, yeah, this is a good company if I haven't even done my own research. And by the way, all these talks, this is not a financial advice or anything. So just to protect ourselves.
Never will be.
But so I don't I just tell them like, hey, if you want to invest your money, make your money work for you, just put in an S&P 500 where the returns are. If you're betting against, if you're betting for America, and if you like America's as a whole, as a country, and the companies that's in America, then put
Sure.
your money in an S&P 500. I know Vanguard has their own S&P 500 fund. I'm not sure what it is. I think it's VOO is the ticker symbol. And you can be diversified through that.